Guys, the market was up big yesterday after the Fed announced their decision on Wednesday. The NASDAQ was up nearly 2%, another big day for the NASDAQ. Apple reported earnings and Palantir reported earnings, also had a big day of a 20% gain. I'm going to get into a couple of other stocks as well. But before we do that, please smash the like button and let's get going from here. Okay, guys, let's get into the earnings from Apple. Apple is a very, very interesting company, nearly $3 trillion company. And if we look at what they reported here, it was a rather good report. Now, I'm going to get into the numbers, but before I do that, let's look at some high-level things. Remember, they had their earnings call. They gave a lot more details on their earnings call. But first of all, the first thing that I wanted to note, revenues came in at $89.5 billion for the quarter. That was down 1% year over year. Initially, there was a decline in the stock price. We're going to see where it ends up today going into Monday. Quarterly diluted earnings per share, $1.46, up 13% year over year. They absolutely crushed in that department. Now, the big question is, what did iPhone sales do? Because remember, the iPhone 15 came out. We want to look at that to see how did the iPhone sales do. And I'm going to come right over here and we're going to go and get right into that. So products. Products came out. Here's that slight decline in products. Services, of course, were higher than quarter over quarter. In my opinion, I think that Apple is becoming more of a service-based company. They are going to, of course, always have outstanding products, but service is a very, very big thing for them going forward. And here's those comparative numbers, $89.5 billion versus $90.2 billion in the third quarter of 2022. Now, when we come down a little bit lower, you can see where they made their money here. The Americas, I should say, had the biggest revenue. Europe was second. China was third. There's a lot of things being thrown around in China saying that, oh, well, maybe the iPhone's going to be banned in China. iPad's going to be banned in China. Coming down here, iPhone revenue came in of $43.8 billion for the quarter, well surpassing the 42.6 of the same quarter last year. Macs were down big time. $11.5 billion in 2022, $7.6 billion this year. I'm not terribly surprised by that. They just announced a new Macs, MacBook Pros and iMacs that are going to be coming out soon. I think you can order them right now. But as people are going back to the office, the MacBook Pro it's a computer that not a lot of people use. I mean, I have one, but it's because I'm doing live streams and I'm using a lot of data and whatnot. Outside of that, I don't really think that a lot of people need that type of stuff. So I'm not surprised to see declining revenues there. iPads, that was a big decline. Wearables, home, and accessories, also a decline, $9.65 billion to $9.32. That was a big decline. I was quite surprised to see that because the Apple Watch is the number one watch in the world. Accessories, I expect that more people would have, as homes get smarter, they have more home stuff, like the little HomePod and whatnot, but that's not happening. Let's see if there's anything else in here that really stands out. Nothing that stands out really, but let's go over to the stock and check it out. And we all know, you can see it's on my watch list at $150. I want to run this through Stock Analyzer tool. And I want to check out the last time that I did Apple. Apple is a company that I own. Do not buy Apple because I own it. You don't know my basis. My basis is $17. I bought this years and years and years ago. There is no reason that you should be buying for the same reasons that I am, or not buying for the same reasons that I am. So make sure you take that into account. Okay, let's look at some numbers here. Revenue growth, my assumptions were 9, 6, and 12, and I stick to those. 6%, I perfectly see Apple doing that. With bringing in services, they are going to be able to do 6% in my opinion. If they crush services and they continue to crush hardware, wearables, etc., I could see them doing 12%. Profit margin, 2023 and 26. Margins are going to increase as the services game gets bigger. That's just because the margins are bigger there. Free cash flow margin, I put in the same numbers. PE, 16, 19, and 22. I actually think those could be a touch low, but I'm going to keep it where it is just to be conservative. And I ran 10% across the board. I'm going to change that in a second, but let's see what it is first. 90 on the low end, 229 on the high end, if you believe my high assumptions. 145 in the middle, and these are the returns if you bought at today's price over the next decade. Now remember, that was with no margin of safety. What does that change? 90 on the low, obviously, and didn't change that one. 125 in the middle, 168 on the high. So I think that my price right around here, about 150, is the correct price. I'm actually going to increase it just a little bit. And what's my reasoning? So I can sell puts on this at a later date. Okay, let's move right over to Palantir. Palantir had a very, very large day on Thursday. They were up 20% after reporting in the morning. Palantir always gets me. I'm actually going to pull this up just so we can go and I can just show you. So they came in estimating 6 cents per share. They came in reporting 7 cents. Again, how many quarters in a row have they done this? And how many quarters in a row have we complained about this? They miraculously beat by 1 cent on earnings per share. Revenues came in very well. They did a good job. They actually did have a very good quarter. That does not surprise me. Palantir, from what I can see, is a good company, but that beating by 1 cent a share is always peculiar to me. So I'm actually going to read a text that I got from our analyst, Dalton. And we talked, I was driving and I texted him and I said, Dalton, go and dig into their earnings report and tell me, do you find anything interesting in there because they beat by 1 cent a share again? And he said, they did have a good quarter, but I think that everybody needs to be aware that their adjusted operating numbers are garbage because they're adding back in stock-based compensation. And that's something that they've been doing for quite some time, and employer payroll taxes associated. So they're acting like the expense just isn't there. That is something that I don't like. I'm not saying that there's fraud, anything like that, but it's definitely something that you want to be worried about. And like we've been saying this for quite some time, their accounting issues are interesting. Not saying it's good, not saying it's bad. Stock price moved 20% today. Hey, I mean, if that's what you're going to be basing your decisions off of, I wouldn't be surprised. If you're in some trouble, just if you're basing it off of stock prices moving. There I saw a lot of comments out there on Twitter saying, oh, they're moving, this is a great company again, and we're heading back towards $45 a share. That's not how I look at things. I base things off of numbers. I base things off of 10Ks and earnings reports and maybe what the company is saying, stock-based compensations, all of these different things. So let's go over here and let's see when the last time I did Palantir was. I did this on September 5th. So Palantir for me is something that I've been following for quite some time. I am apprehensive to get into this stock. I'm telling you right now. Even if this thing hit the value that I wanted, I don't think that I would purchase it. That's my personal opinion. And I think that's perfectly fine. You don't need to buy every single stock in the world. It's not possible. 8%, 16%, and 24% revenue growth. I could see them doing all three of them. 10, 20, and 30% for profit margin. Their cash flow has been higher for the last 10, 11 quarters, maybe 12 quarters at this point. 15, 25, 35. PEs of 15, 20, and 25. Return for me, 15, 20, and 25. Let's click analyze right here. Here's my values. I mean, basically $2 on the low, 9 on the high, probably 4 or 5 in the middle. And I'm sticking to that. And frankly, if it got to 4 or 5, I don't think I would be buying it. This is just not a company that I'm very interested in buying. I don't know if that's right or wrong. I'm sure people are going to have their opinions on it. Actually, put your opinions in the comments. I mean, you can see here, they had a really, really good quarter. Revenues grew 17% year over year. All of their things are adjusted. That's the one thing that gets me with Palantir. But before I move on from Palantir, there's one thing that I do want to look at, and that's the chart. I know a lot of you Value guys are going to be saying, oh, this and that, but I want to show you something. I want to compare it to something that happened this week. So you see this big gap up that happens. This big black space right here is when a stock opens higher than the previous day, we gapped up. Now, if you look at Caterpillar reported earnings earlier this week, and you're probably saying, oh, what are you looking at Caterpillar for? It's not in the same industry. That's not what I'm going for. What I'm going for here is to show you something. Caterpillar gapped way down. They had this big gap, not as big of a gap, but they moved down 6%. And the reason that I didn't do anything with this is because I didn't said, this is not going to keep moving down. This is going to snap back. It's going to fill that gap and move to the top. That's exactly what we've seen over the last 2 days with Caterpillar. So I wouldn't be surprised to see Palantir. So don't get excited and just go jump into this thing because it's going up. This thing has jumped up to a very strong resistance point, and I could absolutely see this thing pulling back down, especially to these major moving averages right down here. Now, I want to say a couple of fun announcements that we have coming up. We're on vacation this week. Paul's out of town. I'm out of town, but I'm here. Anywhere where my computer is, that's where here is. So we are going to New York next week to do an incredible sit-down interview with Guy Spear. I absolutely cannot wait. We're going to talk about The Education of a Value Investor, the book that he wrote. Phenomenal book. If you have not read it, you should read it before our interview comes out. It is a phenomenal, phenomenal book. It is such a basic book for the new investor. If you're new to this world, it really breaks things down beautifully. I would highly suggest that you go and do that. Now, I want to look at a couple more stocks before we hop out of here. Stocks that have had big movers of late, and that is Square or Block. Block moved on earnings 7% recently. It is a company that hit a, let's see here, $289 a share in October of 2021. Today, we are sitting at $43, and that's after being up 7% on Thursday. So again, guys, don't just chase things because the stock price is high. This is what I was telling you on Apple, Palantir, the list goes on. Don't just chase things because that the stock price is going high. Now, I've gone through some stocks here that I am interested. I know that you guys are interested in. Please go in the comments and say, what reactions do you want to see? What stocks do you want us to dig into? What videos do you want to see us come out with? Put your comments down below, and I will see you guys on Monday. Have a fantastic day and a fantastic weekend.